All right, today we're going to talk about opt-out pre-screen and why you as realtors want your clients to do it. Hello, my name is Mike Florin and I'm the owner of Low Cost Mortgage. Today's your weekly update for October 2nd, 2024. Rates are relatively unchanged. Popping up a chart real quick here, it's going to show that rates today are relatively the same as they were last week. It was down a little bit yesterday, but for the most part, it's relatively flat. There's a jobs report that's going to come out tomorrow, and that's going to possibly put upward or downward pressure on rates. So if rates change significantly between now and tomorrow and the next day, I'll shoot another email out saying, rate update, rates drop, or rates increase. Now, the crux of this video is going to be opt-out pre-screen. This is something you as a realtor are going to want all of your clients to do. So, what is opt-out pre-screen? Right now, the way that the credit report companies work is the following. If a borrower, your buyer, decides that they want to buy a car or a house or shop insurance, as soon as there's a credit pull on that, the credit bureaus, Experian, Equifax, and TransUnion, sell your borrower's information to data brokers and other competitors. Now, on the mortgage side, we've seen this for a long time. And one of the things that we do is we get people to opt out of those pre-screened offers. Now, Experian, Equifax, and TransUnion, they sell your information, and when they do that, they sell absolutely every piece of information except the last digit of your social. How do I know that? Because we're able to receive that information if we want to pay for it. In fact, we can get all of that information from you or about you for about, 15 cents, 20 cents. I think it's something like that. So one thing that I could do, we don't do this, but one thing I could do is I could go to one of the credit bureaus and say, hey, I will pay you for information on anybody who's had their mortgage, their credit pulled for a mortgage or credit pulled by a mortgage company. And then I can take that information and call you and sell you on why my company is better than the company you're working with. Now, again, we don't do that, but there's a lot of companies that do. Now, with your information being sold like this, it's pretty bad. I mean, think about the exposure. If your information is just with the credit bureaus, Experian, Equifax, TransUnion, and only with your mortgage company that has secured systems, then your information is most likely relatively secure. But once you start to add 20, 30, or 40 other companies, and they have all of your information, except for the last digit of your social, now you're going to have an issue because potentially there's a higher probability that your information will get stolen. Now, the companies that get this information from the big three credit bureaus, they actually go through a lot of background. In fact, it took us about a month and a half to 2 months of background work and audits and checking our systems out so that way we could accept that information. In fact, we did for about 2 months. And then I shut it off because I don't want to run a company like that. But more importantly, the conversions aren't really that great, and it's just not a good business model. I don't think it is. But there is something that is a good business model, and this is very important for you realtors. Part of our pre-approval process is making our borrowers, or at least showing them that they should opt out of pre-screened offers. In fact, the website is OptOutPrescreen. I'll have it scrolled on the bottom here for this entire video. But with opt-out pre-screen, what that is a joint venture between Equifax, TransUnion, Experian, and Innovatus or something like that. Anyways, there's a fourth one in there too, and we don't use them, so I don't remember the name of it. But if you opt out, this is the Federal Credit Reporting, or the FCRA, created a rule, and the FCRA is governed by the FTC. But anyways, that rule states the following, and that is if a borrower opts out of pre-screened offers, then they must obey that request, and they have to not sell their information. So if your borrowers, your clients, go ahead and opt out of pre-screened offers by going out to optoutprescreen.com and filling out the information that's there, it opts them out, and then their information is not sold. Now, From a business perspective, we have them do that during the pre-approval. So when we first talk to somebody and they fill out an application in our system, the first thing that pops up, and this is a good hint for you other mortgage companies out there, the first thing that pops up, the first task to do is opt-out pre-screen. Now, after they opt out pre-screen, there's other documents that are needed for the pre-approval, but we start that off at the very beginning. Why is that? That's easy. When somebody opts out for a pre-screened offer, it can take 3, 4, 5 days, up to 5 days for that borrower's information to be opted out to be sold to to our competitors or to other companies. Well, if it takes that amount of time to get opted out, and sometimes it's same day and sometimes it's 2 or 3 days, but from the data that we've been collecting, we know for relative certainty after about 4 or 5 days from when they opt out, their information is not sold. So that's what we do. I mean, it's really effective. It's really easy. It just works out really well. Now, realtors, you should probably have your buyers opt out first. You should have them opt out when they first say hello. Hey, let me show you a house real quick. Maybe get you a little interested in the process. Oof, hey, have you opted out of pre-screened offers and do you have a lender? That's where that good conversation will go. You're now giving them a piece of information that's going to save them headache. Now, there's 2 ways to opt out: electronically for 5 years, and then there's a paper option that opts them out for life. So we tell people, opt out electronically for 5 years, do that now. At any time after during the transaction, do your paper version, opt out for life. If somebody doesn't opt out, the amount of phone calls they're going to get right after that hard credit pull happens is obnoxious. So if somebody doesn't opt out, and that happens rarely with us, but if somebody does not opt out for pre-screened offers, Experian, Equifax, and TransUnion are all selling their information to about 10 or 15 or 20 different companies, which means 30, 40, 50, 60, upwards of 80 different companies have your information. Well, what do you think they're going to do with it? They're going to pick up that phone and they're going to call and call and call. And you're not just being called by one company, you're getting called by 20, 30, 40, 60, 80 different companies. And each company is going to call you probably 2 to 6 times, depending on who's on the other side of that phone. Now, that means that if the borrower or your buyer has not opted out to pre-screened offers, as soon as you get it under contract and as soon as that lender does that hard credit pull, their phone starts ringing and it rings off the hook. And you're talking 50, 60, 70, 80 calls in a day for about a week or two. And sometimes those calls are going to last for a month or two. Just companies that are eager and desperate for money, just trying to make money off of it, I guess. But in the end, do some people get a better offer? Sure. Better than us? Not likely. And the main reason is we already do a good job on being extremely competitive on rate. So we don't lose deals through opt-out pre-screen, but I know a lot of our competitors do. In fact, for that 2-month period of time that I decided to try it out, we stole a lot of loans from other companies. But I didn't like the cold calling aspect of it, the pseudo non-solicited, even though they're legally opting into it, they don't know it, and I don't like any of that. Now, that's about it for the opt-out pre-screen. I can go really deep into detail of it, but for you as a realtor, it's extremely, extremely important. I would do this if I was a realtor still. I would have my buyers opt out immediately. So again, that website's going to be scrolled across the bottom this entire time. Go there. It's really simple. You should do it yourself, just so you can see it, so you know how to, coach people on how to do it. Oh, one thing on that. Sometimes we steal loans from other companies. In fact, that happens a lot. That's probably about 30% of our loan volume, is the loan started with another company, and then they find us when they're trying to find a better deal, and then they call us. And of course, at that point in time, we only have 2-3 weeks or so to get their contract in and close the deal. Well, guess what? There's not enough time for them to opt out pre-screen at that time properly. But if their credit was pulled with the previous company, they've probably been already through those phone calls. That way, when we get it, it doesn't really happen that way. But as a realtor, if you have a buyer who's not pre-approved a week or two before they're under contract, and we get that, and now it's a contract with an application with a very short period of time, there's not enough time for that opt-out pre-screen to take effect, which means that borrower is most likely going to get a lot of calls. Now, we're kind of sensitive to that, And what that means is if we get a contract that's a 30-day contract, we have them fill out the application today because we didn't pre-approve them. They just went out and got under contract. We have them opt out, and we try to drag our feet and wait to pull credit for about 2 or 3 days because that helps minimize that impact of the probability of them getting a lot of phone calls. So opt out pre-screen, do some research on your own. It's very important that you know that. Your clients know it, but you as a realtor, you're advising your clients. You have a fiduciary to them. This is kind of an important thing for your fiduciary responsibility, in my opinion, at least. Anyways, Mike Florin, have a great day. Go out and sell. Rates are fairly stable. They should remain that way. And have a great day.